So things are developing quite nicely in terms of the Euro rally. Yesterday we talked about the potential here for the market to turn on the US dollar, and you're seeing a pretty aggressive turn that's continued after the holidays yesterday. So the market was on holiday, there wasn't much movement last night, but straight away at the start of Asia we saw the next leg higher in the Euro, opening the door up for this short squeeze which is continuing. But really, if you're looking at the bigger picture, the Euro was always on the uptrend. It just needed a little bit of good price action to encourage traders to come back in. We're not out of the woods yet, but if we can get back above this 108.30 and hold and start to consolidate here, then the 120 is pretty close and probably going to be on the cards as we go into this ECB meeting by the end of the month. Now, the exact cause of US dollar weakness, there isn't really a catalyst here yet. Maybe the market's just used to selling US dollar a little bit more than it is to buying. Once we found that support level on multiple pairs on Friday, that's really where you've seen now the top side has to be found. So it's not like US dollar is done, and the Fed is raising rates in December and yields are pretty strong, but it had a pretty good run, and a lot of these other pairs have found support at their levels that they should have, apart from the pound, which fell a lot further than most. That means it has a lot more to rally if it gets back into rally mode, and pound often overshoots, right? It's not like it's surprise pound fell 500 points. That's just normal pound behavior, and wouldn't be surprised as well if pound made new highs. That's normal pound behavior. If the market takes the view that May is staying in PM and getting negotiations going forward, that's just, it's onwards and upwards. What's a little bit surprising to me is the weakness in the dollar yen. We did close dollar yen for a loss yesterday, but it's not, it's just the fact that rather than dollar yen being left alone and euro yen, pound yen starting to rally and dollar yen staying the same while the euro rallied in the pound rally, they're hitting the dollar yen here. Now, this is to me probably more of a, we're going to find support relatively soon on dollar yen, given yields haven't dropped much, and it seems more, there's a little bit of concern about some of the polls coming out of Japan, ongoing concern that at some point there'll be another missile test, but stocks are so strong, and so risk on should be the game here, and it's really hard to be bearish dollar yen for the medium term. So the short term, yeah, it looks pretty weak, we're looking for support, but if you're long euro yen or pound yen, the next side up should really be top side rather than downside, and this is like building up more potential here for these pairs to rally, in my opinion, because once dollar yen finds support, and if we can get back a little bit of buying, then the euro yen and pound yen are so well supported here on the euro and the pound moving higher that you will get that move, that sort of delayed move to the next side, especially if stocks continue to rally in the US. It's just going to be so hard for the downside to gain traction. And with the crosses supporting, pound yen and euro yen crosses supporting on every dip, then dollar yen probably is going to find support sooner rather than later. Especially if this is just as Sean, I watched Sean's update today. They're looking for a little bit of stops maybe. That makes a lot of sense, right? There's not too much going on in dollar yen. It's failing at 113, but it's not exactly like the game's over. It's just surprising weakness given the what the backdrop is of that US data last week. All the PMIs were super strong, and the wage inflation numbers are super strong, and the CPI is expected this week to be strong. That's a really good catalyst for dollar yen to be supported. So this is the worst way to sell the US dollar, in my opinion here, while stocks are so strong. Now, if North Korea does something, or if stocks somehow fall, or if the attention turns back to the tax plan and can't get past, then dollar yen selling makes sense. But it's a little preemptive, right? You haven't got that in the backdrop there, so it's not the same really as the other majors. You probably want to be looking at buying euro or buying pound, even buying Aussie over selling dollar yen in the short term. So we'll see if that's the right thesis in the coming days. See how dollar yen behaves and how the euro yen, pound yen behaves. I think the market loves it when pound and euro and pound yen and dollar yen in the same direction, and you get those sharp 300 pip, 400 point, 2-day moves that just are relentless, and more the MO of these pairs lately. So yeah, look, in the race to the bottom, who's going to be the weakest pair going forward? I would bet on yen versus US dollar for sure. But you never know, maybe the elections become a big thing, right? The elections are, the polls are getting close, you know, and if Abe loses, that's Abe's gone, right? I mean, that's a huge part of the dollar-yen rally. And you know, the other guys, the opposition, are not as aggressive as Abe is in getting Japan back to inflation, right? So it's there is some risk there, just political risk, but the US dollar side looks pretty solid from, you know, comparative. If the game is who's going to be stronger in the next 2 weeks, US dollar or yen, it's pretty easy to get to the US dollar side of the argument if everything stays the same. So yeah, that's what we're looking for here. We're looking for the euro yen, which is the underperformer of the euro and the dollar yen. The euro and the euro yen. So the euro's up, you know, 60 points. Euro yen's up only about 30. As sort of the late bloomer here, we've got to get past a bit of resistance, a bit of pick a direction. Hasn't really picked a direction for a while. Once we do, it's especially if it's the top side, I think the market can run with that idea a little easier than it can run with the downside idea, which seems to be more of a profit-taking sort of mode, right, than anything else. So the yields, you know, why we're so heavy, why we're so aggressive on the euro is, you know, that we suspect this is going to become the new thing, right? That, you know, ECB tapering is such an important story, and it's going to be very hard for the market to ignore that, and for the ECB to somehow spin it as a negative, even if they you know, really talk it down, like it's you know, that they're going to be really slow and steady with their tapering. It's still the beginning of the end, right? It's the beginning and the end of the QE, which is the beginning. You know, the yields will never get as low as they were, therefore yields only have one way to go, which is up. So that is a psychological back point, that the euro doesn't rally now, it will rally soon. So you always keep that in the back of your mind as a trader. Then it's really hard to get ultra bearish, and especially when the US dollar is giving back gains like this, right? You got to be, what do I buy? And the euro comes like number one. Especially as Catalan has just disappeared, right? Looks like they won't even declare independence. So that's great for the euro bulls. So Aussie dollars bounced off 77.50. Dollar CAD's reversed pretty sharply from 126. You know, dollar CAD's still the strongest of the commodity currencies, testing 125 at the moment. You know, this could easily break, and we for the first time break the downtrend. But we have to, you know, the burden of proof is still probably on the bears, not the bulls here. But this is getting to heavy. You know, this is getting to nice sell levels. The Bank of Canada has put the brakes on a little bit. There is chances that you don't get any more rate hikes this year, given that they're concerned about the dollar CAD rally, so the Canadian dollar rally. So, you know, that's that makes it a little bit more of an equal battle. And then, you know, the jury probably will go to the oil, which has been, you know, very volatile. You know, very volatile. You know, it's pulling back, but it's day to day. It's very hard to know. It's like moving 2-3% a day. It's very hard to know which the next move is going to be in oil. And if oil does, you know, take advantage of US dollar weakness like gold is, then you might see the dollar CAD sort of put on a show for everyone again. The Kiwi though is being a little bit left behind. So the Kiwi is struggling to take advantage of this US dollar weakness, letting all the pairs rally against Kiwi. Now this is the ongoing political saga in New Zealand, hasn't abated yet, and it won't abate until we get the decision, right? And then afterwards you can get the relief rally, which will be a tradable event. If it's the Nationals, then you can get a definite relief rally of 200 points. If it's Labor, then you might get some selling, further selling, and then, you know, eventual consolidation and rebound, because you know, uncertainty, once it's lifted, does provide a pretty strong catalyst for the reversal in nearly every political situation we've ever seen. Once you get the certainty, regardless of what the certainty is, whether it's Brexit, you know, where they actually voted for Brexit, right? You know, the pound fell, but then when it stabilized, you get that reversal. Same thing here with the Kiwi. The guy who's actually in charge, of, the kingmaker of that New Zealand First Party, he came out with a press conference today talking up how much he liked the fact that Kiwi was falling on political uncertainty. He's not your friend. He's not your friend as a trader. He's like, oh Jesus, he loves this stuff, right? He loves the Kiwi selling. So if you're looking for the buy side, that's not what you want to hear, and therefore you're probably not going to get a preemptive little relief rally, and it will struggle while the rest of the market's rallying, right? You can't jump the gun here, because there is a chance that Labor gets the nod from him, even though they're unnatural bed partners, because it's not Labor, it's Labor and Greens, and he definitely doesn't like the Greens. So the relationship, if it was just Labor or Nationals and he had to choose one, then then it's a bit more of an even battle. Considering it's Greens and Nationals together, Green and Labor together, then it's less likely he does do the unthinkable and sort of join with Labor, because he's conservative party, right? So it's more natural fit for the Nationals, conservative. There, but we'll see how it plays out. My suspicion is we'll get a nice little relief rally next week. In terms of chasing the euro, euro can easily continue high here, and so can the pound. The pound's only halfway through sort of what you would expect in some sort of reversal rally. It is a little late, and if the US dollar is going to put on a bit of a resistance, then it can start to come in here. Previous highs are getting previous supports and now turning resistance, right? And this is the last sort of area you get a little bit worried. This next 30 pips probably is no man's land, and so it's not really like, if you're long, keep holding. If you're not long, then you might be a little bit late. It's a bit more dangerous up here. And same with dollar yen selling, right? If you're short, keep holding. Don't sell here, right? You're asking for trouble. So you always got to keep that, that risk reward is the main thing that overrides every other discussion point in your trading. You can have all these great technical theories, or all these great fundamental theories, all these great price action theories. If the risk reward isn't there, I don't care how certain you are about the next 20 pips or 30 pips. It's just not worth it. If it's less than 1-to-1. If you're wrong, how much you really lose. Yeah, I hope you guys haven't been caught too offside here. It is harder when the trend changes, isn't it? But we've been talking about it up for a while, that the euro anyway. So that shouldn't be a surprise if you've been following this stream anyway. And what we need to see now is just hold above 118.50 tonight would be great. And we'll get a bit more aggressive going into next week. This is all just confirmation, right? This is confirmation of what's going on. You have a theory and what you think is going to happen, and starts to happen. That lets you buy more, that lets you get more aggressive. But now we have to break this level to really get everyone else on board, the technical traders in particular. So the fundamental, you need backup, and it's not really technical traders. You need algos, right? And algos are built pretty much technically based upon price action and stop hunting. So natural resistances, you see them tested a lot. So this level should get tested. It should get tested. If it doesn't, then you got more information, and it's the information that the US dollar is stronger, or the euro is weaker than you first thought. So you can put that in your box. So this time, what would that mean in practicality? If the euro somehow fell down to 117, I wouldn't be buying. I would be very concerned about the where the euro is going if this particular rally failed. More than any other rally, if this particular rally failed, this is by all counts supposed to be the start of something. It's the same as if you're looking at the dollar index. Dollar index is reversed pretty sharply off the previous resistance as well. And so, you know, if somehow we got back up to 94 again, you don't want to sell there again. Right? This is showing a second wave of US dollar strength, and you have to respect that. You know, perhaps these CPI numbers are super strong. Perhaps the tax plan comes along. You know, these things that can change the game pretty quickly. And there's a few factors in play. North Korea testing a missile won't help the dollar yen, that's for sure, or the dollar. It should help the euro. But the bigger issues, maybe along the lines of the Fed chief, the new Fed chief, who it is. That's the big story. It could break anytime. North Korea could break anytime. Stock markets in the US fall anytime. They're extremely overbought. But yeah, you probably need a new Fed chief or North Korea to get a sharp sell-off. But that changes the game. But when the game doesn't change, it's very hard to deny the what's happening here is going to continue to happen. There is a little bit stalling though with the euro, so the DAX at 13,000. A few lower highs here. That's normal. If the euro starts to rally, then the DAX will underperform. It did that last time the euro rallied, so you have to go back and check how the DAX behaved, right? While the euro was falling, was a very sharp rally. Yeah, how the DAX behaved in July and in August, right? Sorry, July, September, was it failed, right? When the euro was up above 120, the DAX was down in 12,000. That's a serious element to the DAX trading, is the valuations in US dollars, and the euro affects that pretty dramatically. It can take some of the wind out of the sails. So this rally towards 13,000, if I was going to sell Dow Jones or DAX, I'll sell the DAX 10 times more likely. Just from the view that the euro is going higher and that the end of QE is coming, and you know, if you're looking for a way to get short stocks, not something I recommend. We tried that. We tried that last week in the middle of the 8-day rally, and the balance was 57,000. So now the balance of 50. If you're asking yourself how that balance fell, that was all the Dow Jones. That was a little bit of a side adventure that didn't work out. Let's have a look at some of the research here on the idea of what's going on in the Japanese election and how that's going to affect the yen. I suppose that's the most important thing here, because people are a little bit asking, well, my traders, my clients, asking today, why is dollar yen so weak when the US dollar is so strong? And you know, they've been taught a little bit by me about what drives dollar yen. So you know, without the North Korea test, should have started to rally again. You know, very similar to how it reacted after the announcement, right? That was after the non-farm payrolls. And so why have we not gone back into rally mode after North Korea didn't test the missile, which caused the pullback? Well, I think the damage technically was done, right? That was pretty damaging. And look, Jesus, you don't want to buy into that too much, do you? But the other side of the story is US dollar's weakness is pretty broad based, and the Japanese election is getting closer. Alright, without the North Korea cap, we believe fundamentals would dictate a rise to over 115. Okay, so we're on the same page here, Deutsche Bank, so give me some color as to why we're not. Fell back on North Korea concerns. Yeah. Okay, well, those gone. Let's have a look at the polls. So 22nd of October is a Sunday, not too far away. It's about 10 days away, 12 days away. Alright. Depending on how many seats the LDP lose, so it's supposed to lose a few because they crushed it, right, last time, is how much Abe's power continues. So lack of power is bad for dollar yen because you know, he needs a mandate to continue to doing these quite aggressive policies. Risk it towards a rise in yields, which is, you know, good for the yen, bad for dollar yen. As long as he doesn't lose power, we think the yen and equity markets are unlikely to react dramatically. If Abe should step down, we expect a brief appreciation in the yen and a downturn in stock markets. We do not believe this will be long lasting. Okay, just another opportunity to buy the dip if something surprising happens, I suppose. But at this stage, if the dollar yen does have a bit of a move lower, it gets a little teary as to where we're going to buy. Towards the 111.50, perhaps. It had an almighty rally here. Now this is probably half the reason that the dollar yen struggled to kick on with US dollar strength and just even, you know, this is nothing. This is nothing, this pullback, right? This is, you know, given that the US dollar has been fairly, you know, given back a full 1 point on the index, the dollar yen's holding up still. So yeah, mild weakness is what I suspect, and if we get nice price action on the dollar yen, then rather than buy dollar yen, we'll buy more pound yen or euro yen whenever we feel like the dollar yen's got some support. I suppose I better check the technicals every now and again, just in case something's close. We found out the Aussie dollar support was pretty close. Alright, looking for a small rebound. Finding initial resistance at 118.30. That's nothing. Yeah, gold's pretty surprising to me. It had a huge fall, right? So the rebound is but the rebound is bigger than any other pair currency wise. Got some pretty strong resistance coming up here, the next $10. So you're pretty late to that party if you're gonna get in long now. If you're short, somehow still the next $10 is what you want to see the market reverse from. Broadly speaking, when yields and stocks are strong, gold isn't. There is some seasonal factors. Right now is gold buying in India, and that told to me a lot by my Indian traders a few times in the last few days. So coming up in the next few weeks is you know, historically a strong demand for physical gold. I don't know how much that correlates into, you know, outperformance here by gold, but I don't know, it's something to keep in the back of your mind every now and again. If something like that comes up next year, you'll be like, oh, maybe I won't sell gold in this next 2 week period. Don't want to have that weird price action like we're getting in the last 3 days, because that's outperformance when there hasn't been. You know, that's the same sort of rally you'd expect if North Korea had done something. So the longer term uptrend in euro and pound is still holding. Got to give it respect. And the big level on the Aussie dollar held 77.50. So even though we're pretty neutral to bearish on the Aussie dollar broadly, and you're seeing that certain pairs are taking advantage of the Aussie dollar underperformance. So Aussie dollars here, if you're looking at the Euro Aussie, which is an interesting, like the one I look at to see broadly how the Aussie's going, it's well supported still. So the Aussie, it's really hard to make that bullish case in the short term. So apart from the price action, there's not too many reasons to chase the Aussie. But it is on one particular area that is often traded by us. Is the Aussie Kiwi. It's back above 110 with little fanfare, just mostly on the Kiwi weakness, given that it's and the Kiwi underperformance can't rally while it's got that uncertainty. This rally here looks very dangerous to me, not because of the structure here. Like, I mean, this is very bullish, right? This is extremely bullish, technically, but the timing of it, given that the Aussie is pretty neutral and negative, when the Kiwi does have a relief rally, which might be if Labour wins, then it can get to 113 or 112 quite quickly. If the Nationals win, though, you could find yourself wrong-footed if you're buying Aussie Kiwi up here. The Nationals win, then the Kiwi should outperform the Aussie for a week or two, and that will bring us back down to the low 109s easily, maybe further. So yeah, it's not really the time. The story behind the Aussie Kiwi rally is technical, and the backdrop is there's a fundamental black cloud over the Kiwi dollar. So don't read too much into this. This is not perfect. This is dangerous. I suspect Nationals will get the coalition, and we will get a reversal here from the Kiwi side, not the Aussie side, the Kiwi side. So the Kiwi dollar strengthening, pulling the Aussie Kiwi down. So yeah, this has been a trade that a lot of traders talk to me about. Are we buying Aussie Kiwi here? I'm like, maybe not. Maybe there's other trades that are a lot safer. This trade it looks good, right? But the looks of the trade doesn't always show the underlying. Always with the crosses, you've got to keep an eye on what's going on with the majors. So you drill down, before you place any cross trade, you've got to find out what's going on with the majors. So you look at the Aussie, you see the Aussie found support 77.50. You look at the Kiwi, you see it hasn't bounced. What's going on with the Kiwi? It's under pressure because of the elections. When's that finish? Finishes in 3 days, one way or the other. So this is becoming a bit of a coin flip at the very least, with the coin stacked towards a pullback. Dollar yen. Yeah, so dollar yen's got a fair bit of distance to run to get to the Ichimoku cloud. So we've still got heaps of support to get through to get down there. Part of me wants a nice sell-off in dollar yen, a nice little missile test. Give us some good entries on dollar yen towards 110 and euro yen towards 130, 150. In the absence of that, though, I don't think you're going to get the big pullback that we've been hoping for. So yeah, it's not the worst. Yeah, I mean, if you're against waking up and being down 100 points, then you don't buy the euro yen here, because that North Korea thing could happen. If you believe the Russian politician, it says he just visited Russia and they're planning to launch a ICBM test. Yes, I wish you guys would stop saying kedging. I know it is a fad that you guys all love, but by God, if you go down the hedging rabbit hole, 90% will not come back out. It is very, very attractive intellectually, and anytime I can hedge, and I'll keep playing both sides. The downside is you are paying a spread again, and the indecision that you get from having lack of necessary needing to pick a side at any point, broadly generally leads you to hold your losses longer than you would. You might end up making some profits, but you'd never end up getting the full return on a trade that you expect to go long. So you have to be very psychological, nimble. You have to be able to close out huge losses. Your MyFX book would look ridiculous. And it's much harder than just having stops and take profits. I know that some people do it well, and that's fine, but it's a strategy you might want to start trading after about 3 years, 4 years in the market, and then try it out to see how it works with you. So yeah, I don't know. Good luck, guys. I know you're all into that, but it's yeah, that's one of the hardest strategies probably out there to perfect. You literally have to have two states of mind the whole time. If you know, euro's going up, I'm doing this. If euro's going down, I'm doing this. It's like you have to be completely technical. You have to have almost no news outside that, right? You know, I suppose you don't care about NFP or anything like that. You just price actions everything. You can sink into the charts and just trade the charts 100%. Total return 10 years. S&P near 100%. Oil down still. Wheat down still. Greece still heavily down. Banks still down. Silver. Okay, gold up there. Gold is up there. I wonder if we can turn the... Oh, there we go. Here we go. Look at that. So DAX is still underperforming. 10 years. Okay. I mean, I've got the bias because, you know, the rally DAX has been on recently since the ECB. Last 4 years is huge. Wow, S&P number one, huh? FTSE's just going nowhere. You know that, yeah, maybe we still be looking at FTSE eventually over time as well, going up. Similar to ASX. ASX is pretty heavy in resource stocks and hasn't had that follow through yet. Still lower than GFC. Alright guys, that's enough for today. If you have any questions or want me to look at particular pairs tomorrow, send me a little PM and we will look at those crosses in particular are interesting at the moment. Other than that, trade safe and keep an eye on this euro and the pound. See how the US session. The US is the first day back, right? And yesterday didn't count, so today is the first real trading where you see what their expressions towards the US dollar is. Could be different to the other two sessions so far today.